Good morning, Akshay. Always a pleasure to have you here.
Good
So,
morning, Suyash, and to all the viewers.
Akshay, now yesterday's trade was quite interesting. We opened on a flattish note, went on to make a new high. At least we reclaimed that October swing high of about 19,843. But in the last half an hour to 45 minutes, the index declined by about 50-60 basis points. What was the reason for that decline, in your opinion? Was it a technical, perhaps we had peaked because we did reclaim that October swing high?
Well, Suyash, the first thing was, we were dealing with a very crucial resistance yesterday, which was 19,850 odd levels. So, as you rightly mentioned, we saw this level exactly a month back on 17th of October. And from that levels, we had seen a strong drop in Nifty till the 18,800 odd levels. But when it comes to yesterday's trading, one of the important point was yesterday was the weekly expiry of the Nifty index. And weekly expiries are known to get surprise elements in you always. If you see, I would like just to share that yesterday the 19,800 put in the Nifty weekly expiry flared all the way up from 50 paisa to 60 odd rupees. So, that's how the Nifty weekly expiries work. You never know. It's just a bag full of surprises. It's hard on the option writers at times, but very rewarding to the buyers. So I think it was more about the expiry move because 150, 200 odd point fall from the highs without any news is just because it tests a resistance is out of context. So as far as the day trading goes, yes, that level does have importance. It will play out again for day trading session. So the levels to watch out is how Nifty reacts once again once it tests the 19,800 levels, because you have a lot of call writing bets positioned for the coming weekly expiry at the levels of 19,800 strike. So watch out for 19,800, 19,875. These are stopover resistances. Mind you, these are stopover again, I repeat, because they really have implications as far as day trading or a carry forward trade is concerned. No serious implications, as I understand, in terms of the broader trend. Broadly, Nifty is heading for 20,000 plus. It's just a matter of time. Supports which I see in Nifty, in case you have a small break, as I say, is 19,675 to 19,610. Accumulate on dips in case you get those dips. Otherwise, the broader view continues to be positioned on the buy side. Targets 20,000 plus as we head into the November expiry.
All right, that's a view on Nifty. But Akshay, Bank Nifty, which was, perhaps turning out to be a leader at least in the November series so far. But, we had witnessed signs of exhaustion, at least at higher levels, where the index would give up around 150 to 200 points from the day's high. But in yesterday's trade and in today's trade as well, I mean, there is of course a negative news flow for the banking and the financial pack, of course. But we saw a gap down opening. We have broken down below the 44,000 mark. What are the levels that you are tracking on Bank Nifty?
Well, Bank Nifty actually especially was a laggard. If you look at the last couple of days trade, Nifty was clearly taking the lead, and probably the market knew the news which majority of the traders didn't. That was the news which came out today about the RBI increasing the risk weights in the unsecured retail loans to NBFCs. This news is playing out, as I understand, even in the derivative space. If you would look at the way the options data is positioned, 44,000 has serious call writing bets. So that's a very important resistance level. As a trader, you need to keep a watch on how the call writers are positioned. So 44,000, 44,100 roughly works out to be a very strong resistance for the bank index. These levels are going to play out today. It's a gap down opening. And as I understand, Bank Nifty is trying to recover its lost ground, but I do not see any serious recovery as far as day trading goes. If you are looking at the supports, well, we are below the 44,000 support as of now. So the first point for any gains, if Bank Nifty has to post, would be to regain its lost glory. That's it has to sustain about 44,000. That's the first point I would be interested in if Bank Nifty manages to break. My view is that it is going to be a choppy session. It's going to be trade. It's going to trade on slightly a SAR note as far as day trading goes. So the supports of 43,800 would come into play maybe today or maybe on Monday. So you have to work with the levels of 43,800, 825 and 44,000. That's for short-term trading. I would recommend let Bank Nifty sustain above 44,000. Then you can search for buying trades in the bank index.
Now, I mean, there is mutedness in the headliners and the banking pack, but the broader markets, Akshay, have been showing resilience, at least in the face of volatility. First, it was a small cap index that was making new highs on a pretty much on a regular basis, but the mid cap index has also made a lifetime high in yesterday's trade. I think it's also building onto those gains in today's trade as well. Between the two, the small caps and the mid caps, on the price charts, what would you prefer?
Well, I would prefer the mid-cap space. Well, the charts for both of them have a very strange story to say because the kind of run which we have seen since, especially since the beginning of November, it's defined all charting logic in the sense that it's be a one-way rally. There are no, not even a slight correction which I see in the mid-cap space. Right from, if you were to look at the mid-cap 100 index from 38,000 to 41,795 as it currently trades, it's been a one-way rally. No stopping this index. So clearly the momentum flow is intact. The money flow, which I understand, is strongly positioned in the mid-cap space. And if I were to select one of the index among these two, I would prefer the mid-cap 100 index, considering the fact that this index is more reliable in terms of the number of the activity or the shares which are traded and the stocks which are form a part of this index. So stay with the mid cap Nifty 100 index. Still further gains possible in this. Although overbought, the momentum is intact. Possibly 43,000 is where this index is heading for.
Now, another sector that is doing fairly well is the IT pack. In the last 3 days alone, Nifty IT is up around 5.5 to 5.8% or so. And even in this rally, the bellwethers are now participating. If you look at the returns of TCS, Infosys, all of them I think are even Wipro, which by the way I remember you recommending, and you're giving a target price of about 397, which by the way it has also met. So between all these bellwether stocks, I'm talking about the top 5, top 6 IT companies, what would be your preferred pick at this point in time?
Well, firstly, the IT index, unfortunately, till now, yesterday, it was more of a laggard. The Nifty picked up strongly, rebounded well, but IT was somewhere, left behind in this entire scheme of things. And yesterday, it came back really with a strong vengeance, led by TCS, especially the buyback news, which, is one kind of a booster for the entire pack. So here, if you were to look at stocks which would do well, firstly, I would stay with the stocks which are showing strength, and that's TCS, which comes to my name first. 3514 is where it trades. A very strong chart setup, backed by news, backed by the derivatives data, and I would say 36 is where the stock is. 3600 is where the stock is heading for within this November expiry itself. 3440 is the base. So I would be buying TCS at this given rate. The second stock, Wipro, again, is one on my watch list because Wipro has a very strong base at 380.85. The stock has come out of its base. The derivatives data hints long unwinding, and that's a positive sign for the stock to further rally up to 410. So that's my target for Wipro. And lastly, HCL Tech here from the big IT names which you mentioned about. This also has a very strong technical price structure, a possible rounding bottom breakout, which we noted at 1300 yesterday, which gives you a target of 1375 on the upside. So these are the three top bets on the IT space: TCS, HCL Tech, and Wipro, which I would be looking for in the short term to medium term time frame.
Akshay, also wanted to get your view on the pharma pack. Now, I think Nifty Pharma has made an all-time high today. The index, at least since August, has been struggling near that 15,700 sort of levels. On an intra-day basis, we would claim those levels, but we could not close above those levels. Finally, we have opened significantly above that and made a new all-time high. And even if you look at the rally in some of these pharma stocks in November, I think the pharma index on the whole is up around 7% in November alone. What's your take on the pharma pack? Can we expect the rally to continue? And if you could give us one or two stocks that perhaps one can look at in the pharma pack.
See, in the pharma space, one thing is the November has been excellent in terms of the rally which this index has posted from roughly around 14,500 to 15,730, where this index trades. It's been a very strong rally, but a slight concern for me, a caution note for me if you are trading, because we are almost near the all-time highs. In fact, we have just managed to get past the all-time high levels on the pharma index. We saw these levels way back in the month of August. So these levels are revisited, and there is a good chance that there might be some profit booking. So you need to take your profits off the table, especially if you are a trader. So booking profits is recommended if you have a short-term vision in the market or a trading perspective. If you are positioned for a medium to long term, then yes, definitely this index has more upside to go in the days to come. Now, the couple of stocks here which I like based on the technical setup here. One is Glenmark Pharma here, and Aurobindo Pharma. If I were to look at the chart structure, Glenmark is in a range. It's time and again showing strong indications of bump up from the bottom or the range bottom, which I mentioned is seeing long additions here. So I would recommend go for buying in Glenmark Pharma. The target price I'm working with is around 815 to 827 with a stop of 737. And Aurobindo Pharma, which again has been an outperformer in the November series in the pharma pack. Slight consolidation in last couple of days, but I believe the momentum will regain. Look to buy Pharma for a target of 1010. That's the higher target I look for, and with a stop of 957. So these are the two pharma bets I would recommend in the pharma space.
Now, Akshay, before we let you go, any 2-3 stocks, or trading ideas that you could give for our viewers for the very short term?
For the very short term, one is healthcare space. Again, with pharma, this is going hand in hand in the last few trading sessions. So Metropolis Healthcare is one stock already up by about 1% today in a day trading session. And I believe the chart setup is extremely healthy for if you are a trader or even positioned for medium term. Look to buy Metropolis. The targets are around 1647 to 1662. The stop loss will be 1570 on this trade. That's the first trade you can look at. If you are looking from the IT space, then Dixon Technology is one stock which I would like to bring to your notice. Again, from the pharma space, it is picking up momentum right now, as I see around 1% up almost. Yesterday was a very strong day for Dixon Technologies. The target area I'm working for in Dixon Technologies is around roughly around 5790 to 5840, stop loss 5230. And if you're looking for short candidates, again, keep small targets if you are shorting because it's a buyer's market. But a banking name which comes to my mind, Axis Bank, already a gap down. So, the comfort is not there. Let it rebound a bit. Let it get back somewhere around 1020 odd levels. Then you can look to short Axis Bank. A slight weak chart structure here. News flow is negative, so probably around 990 odd levels is where you can target in Axis Bank on the short side.
All right, that's the view coming in from Akshay Bhagwat of JM Financial. Sir, always a pleasure talking to you. Appreciate you joining us here on First Take.
Thank you.